all eyes, of course, on the free trade agreement, the trade and economic agreement that India has signed with 4 European countries, including Switzerland, which essentially means cheaper alcohol, cheaper wine and cheaper chocolate, as well as all things Swiss, including watches.
Yeah, so I would just say, I would not say don't count your horses yet, I'll say don't count your wine bottles just as yet, because you know these deals obviously are planned for a long term, and I think the cost benefit for Indians who consume these imported chocolates or wines is going to accrue gradually over the next 10 years or so.
10 to 15 years.
So right now, as we stand, I mean, obviously, you know, $100 billion of investment to flow into India over the next couple of years, few years, in fact, 10 years or so. And the fact that all these duty concessions are going to kick in for Indians who like to consume them. I think more than all of that, the price benefit to end consumers is the fact that this the signing of the deal between India and EFTA sets the tone, sets the template for what has been in the works, for over the last 16 odd years, number one. Number two, whatever we have not seen unfold by way of the 27-nation European Union's FTA with India or with the UK FTA with India, these are deals which have again been in the talks for a very long time, and we haven't really seen much action. So I think the deal with EFTA, apart from these cost concessions and import duty reductions, also sets a template for how India wants to engage with developed nations, with European nations, and with blocs which exist therein, to ensure that there is this bilateral flow of goods and services, of people and of investments.
Absolutely.
So $100 billion coming in, I think, is a bigger headline for me than the fact that over the next 10 years, chocolates or watches or wines are going to get cheaper.
But of course, it's going to be a double bonanza for India. Of course, from a consumer point of view, you're looking at cheaper access to European products, but mainly from 4 different countries. So a TIPA that has been signed with EFTA, the Economic Free Trade Union or Association, consists of 4 countries at the moment.
That's right.
So $100 billion are coming into India from these 4 countries, and their markets will also be made available to India.
So broadly, I think what we are seeing unfold here, Shweta, again, is not just a China plus one, but this overall push towards manufacturing in India. And through EFTA and through any such MFN or free trade agreement, what we really tend to see is great dollar inflow in terms of companies which are based abroad setting up their manufacturing bases here in India. Now, the 4 countries that you spoke about, the Switzerland, there's Iceland, there's Norway, and there's Liechtenstein, if I pronounced it right. So these are the 4 countries which are now part of this EFTA bloc. And India becomes a default sort of manufacturing base for a lot of companies in multiple industries there. So you mentioned chocolates and watches and wines, but there are enough and more sectors, including industrial goods, where India now becomes a manufacturing base, and the export potential that these patented technologies or products or the sort of advantage, the regional advantage that they get by way of over time these becoming very, very known for the districts that they come from or the countries that they come from, the export potential of these products is huge. The Norwegian salmon, for example, right? Everybody looks at the Norwegian salmon anywhere in the world when you want to buy and eat that fish. Now, if the food processing unit in India starts catering to a larger international demand for export of Norwegian salmon, then we are looking at the whole world opening up as a market to Indian packaged food and beverages. So it ties in very well with the overall existing PLI schemes that the government of India has. Textiles, for example, food processing, pharmaceuticals, industrial goods. These are the sectors which are now going to get a fillip of about $100 billion or so, with the export potential out from India for those products which are not really Indian products per se, opening up for the world.
Absolutely, and a $100 billion deal there with European nations, 4 of them in particular, is going to open up market for Indian exporters in Europe to a large degree, and will also be helpful to a lot of consumers who are looking to get some of these items at a relatively cheaper price. That is, of course, a building story.